Good morning everyone and welcome back to my YouTube channel. So in today's video we're going to discuss about internal structure. What is internal structure? Internal structure will help you to catch multiple opportunities in a single leg move. For example, in this diagram here we have marked our inducement here. The market has taken out this inducement, pushed higher to break this structure, and then keep pushing and drop to take out this inducement, and after that the market mitigate something below here before rising and completely broke this structure. Okay, but sometimes the market will take very long to drop and mitigate your order block or your inducement. Here the market will do things like this, will keep pushing higher and create a new structure without taking out an inducement. So if the market doesn't take out your inducement, you cannot take a buy here according to real SMC. Okay, but with internal structure you can take entries based on these small structures here without waiting for the market to take out your inducement or to mitigate your order block. Okay, you can use session liquidity or create another small structures like breakout structures, inducements in internal structures. Okay, so you can take small sales here, short-term sales here, until the market will come to take out your inducement or mitigate your valid order block before you can take your trade. So with internal structure you can take multiple trades, you can have multiple opportunities in a single leg move, but you have to keep in mind also that this will be low probability and short-term trades because the market is not mitigating your higher time frame or your valid order block or taking out your valid inducement. Okay, so this is just a diagram to explain you. So now we are going to move to a real chart so that I can give you real examples. So here we are in this real chart. Here we are on our main time frame, which is M15. So we have to start with our normal structure mapping. Okay, so we see that the market is mainly bearish here. Okay, if you look a little bit back here, the market is mainly bearish, so you have to start marking your higher highs and your lower highs and lower low. Okay, so we see here this is the last lowest point, which is here. Okay, so if you want to confirm that this is a valid lower low, you have to look for inducement. You have to check if the market has taken out any inducement. Yes, the market has taken out this inducement, so this lower low is a valid one. Okay, so after that we have to identify the previous break of structure, which is here. This one is our previous break of structure, but how can we be sure this is a valid break of structure? We have to check if the last higher lower high is a valid one, this lower high here. Okay, let me mark it. So this is our last lower high here, and the market has taken out this inducement below here, so this lower high is a valid one. Okay, so this one is also valid. Okay, so this lower high is valid, then this break of structure is a valid one because the market has cleared inducement before dropping and breaking this structure. Okay, so this one is a valid one too, so this structure mapping is enough. Now we have two lower lows and one lower high, so this is enough for our analysis. Okay, so at this point the market has already taken out this inducement, so you have to now mark your valid break, your valid order blocks. Okay, so you have to look on the left side here to check if there is any candle that can act like an order block. Okay, this one is our valid order block. So this is our first order block, so this is the decisional order block. So at this point you have to wait for the market to push higher to mitigate this order block, or wait until the market mitigate our extreme order block, which is above here, because this candle has cleared this previous candle high. Okay, okay, so these are the two cases. You have to wait for the market to push high. After taking this inducement, you have to wait for it to mitigate this inducement here, or create a single candle order block, or give you any signs of reversal, then you can take your trade. But at this point the market didn't even mitigate our decisional order block, and the market didn't create any single candle order block that can allow us to take a trade here. So the market will start ranging like this, and you have to either wait for the market to completely break the structure and create another structure. another inducement, the market push higher, take out and mitigate your order block, or create a single candle order block before you can take a sell. But with internal structure, you can take trades based on small structures like this one, or you can take trades based on session liquidity sweep. Okay, so at this point here, let me ask you, do you know why the market has made this small reaction here? Let me come back a little bit so that you guys can understand better. So at this point here, the market has clearly made a small rejection here. So you have to be a little bit clever to know why the market has made this small reaction here. So here, this is an order flow, okay? And an order block is a refinement of an order flow, okay? So you have also to mark your order flows. Usually we only mark our order blocks and wait for the market to mitigate it, but the market will come close to our order block and completely reverse. At that moment, that means the market has probably mitigated an order flow. An order flow is the last buying move before this downside move. Okay, so this is our order flow, and this order block is the refinement of this order flow. So if the market mitigate your order flow and give you any sign of reversal, you can switch to lower time frame and take your sell. Okay, this is the first opportunity here. You can switch to your lower time frame and take your sell based on this order flow, and this will be a valid entry. Okay, so this one here, and a take profit will be the last lower low here. Okay, but you also have to keep in mind that an order flow is very huge, so sometimes the market will drop and rise again to clear liquidity because this order flow is very large. That's why we usually refine the order flow to only mark our order block here. So this order block is also valid. If the market push higher and mitigate our order block, we can still take a sell here because this structure is still valid. Okay, at this point the market has taken out our previous trade here, maybe our break even, because the market has made a small reaction here and start pushing higher here. But at this point now, the market is starting creating real internal structure. Look at this picture here. The market has dropped and create this small structure like this and push little bit higher. Okay, then you have to mark your internal structure. This is like an inducement the market has taken out. This inducement in terms of internal structure, okay, and the market has mitigated something above here. No, it doesn't mitigate anything. Okay, then we have to wait for the market to create another, to give us another indication of reversal. Then you can start selling because the market is creating lower time frame structure. Okay, so this will be our breakout structure in terms of lower in terms of internal structures. Okay, so at this point the market is creating like a single candle order block here. This case we can use this shadow to, no, this is not a valid single candle order block, okay, because the market didn't clear any liquidity behind here, so we cannot use it as a valid single candle order block. Okay, then you have to wait for the market to create another structure in lower time frame, in internal, so that you can take your sell. Okay, so now the market has broken structure in terms of lower time frame. Know that in terms of lower time frame, I mark the breakout structures with lower cases, but the main structures I mark them with uppercase. Okay, so this is our internal structure. The market has broken this internal structure. Then we have to wait for the market to take out an inducement and mitigate an order block or create a single kind of order block. Then we can take our sell. So here, this is our decisional order block in terms of internal structure, and this is our extreme order block. Let me check this one. This is our extreme order block here. So if the market push higher like this and mitigate this decisional order block and give us any indication for sell, then we can take a sell. Or if the market push higher and mitigate this extreme order block and give us any signs, any indications of reversal, we can also take a sell based on this small internal structure here. Okay, so let's see and wait. Let's wait and see what the market will do. Okay, so here we are, the market has mitigated our decisional order block. So now we can push letter B to see if the market will give us any signs of reversal. Here the market, no, the market hasn't created a single kind of order block, so we have to wait and see what will happen. So the market is not giving us a real indication of reversal, so we cannot switch to lower time frame to look for entry confirmation. Okay, so look at this picture here. At this point the market has completely broken our decisional order block in terms of internal structure. The market has given a small reaction here, but it didn't respect it. The market has completely broken this structure here. But at this point, the market has also cleared this session liquidity here. So this is the first indication that the market is willing to reverse. And then this is our valid single candle order block. Why? Because this candle has cleared the liquidity of the session high. This is a single candle order block, not because it had cleared the liquidity of the previous candle, but it has cleared the liquidity of this session liquidity. Okay, so you can mark it as a valid single candle order block, but you see that the next candle has not closed below it. Okay, so we have to transfer our single candle order block to the next one, which is here. This one has a proper imbalance, so this one is our single candle order block. So we can wait and see if the market will rise again and mitigate it. Then we can take definitely a sell here, because this is a valid entry, okay, in terms of internal structure, and our take profit will be the last structure below here. So let's wait and see what will the market do. The market has triggered our sell and start pushing downside. Okay, and finally the market has completely broken this structure here. The market didn't respect our structure. It has only given a small reaction here, and the market has pushed higher. But look above here, the market has pushed to mitigate our normal order block in terms of main structure here. You see that the market has mitigated this refinement of this order flow. So this is our order block, the order block that we have marked in the beginning of this video. So the market has mitigated and completely dropping now. So this is like this is a trade that will be a little bit hard to catch, because this move is caused by a high impact news. So if you have banned your sell limit here, you can take this sell here, because as I told you, this structure is still valid. The market is creating internal structures here, and we can still wait for the market to push higher to mitigate our decisional order block here, so we can also take a sell. But while waiting for the market to push higher and mitigate our decisional order block, we can use these internal structures, create these structures, and look for sell opportunities. Okay, so this is how you can catch internal structure, how you can mark your internal structure while you are waiting for the market to mitigate your order block or to take out an inducement. Then you can start looking for internal structures like this and start marking it properly and find an entry point like liquidity sweep, session liquidity sweep. Okay, so this is in terms of internal structure, so the probability will be a little bit low, and you have to reduce your risk because you are trading counter trends, you are trading on short term, so you have to be flexible with your positions, and you have to reduce your position and take only short-term trades. So let's move a little bit forward to see if you can have another example. So here the market has taken has mitigated our valid order block and completely dropping here. So let's see if the market will break the structure below. So the market has completely broken the structure below here, so we have to wait now for the market to push higher, take out inducement, and then we can start selling based on our valid order block or internal structures. Okay, so this is now our inducement here, so we have to wait for the market to take out this inducement and mark our decisional order block and extreme order block. So wait for the market to mitigate it, and then we can start selling. So let's wait and see what will the market do. Okay, I have completely jumped forward to show you this example here. So after the market has broken this structure below here, the market has pushed higher to take out this inducement, and then the market has completely changed character here. This is our last lower high, so the market has broken it, and now we will be looking for buy opportunities in our main time frame. Okay, so after the market has broken this structure here, we have to wait for the market to drop and take out an inducement. Then we can wait for the market to mitigate our order block, our decisional order block or extreme order block, or create a single kind of order block. Then we can start buying. Okay, so after the market has taken out this inducement here, this is our decisional order block, and we have to wait for the market to drop and mitigate it. So here is the perfect example where we can use an internal structure, okay, while waiting for the market to mitigate your decisional order block or your extreme order block. You see that the market has dropped to mitigate our decisional order block, and after that it failed. The decisional order block failed to make a reaction here, so the market has broken it. And you see that our extreme order block is really low below here. So you have to wait for very long before the market will drop and mitigate this extreme order block, which is here. Okay, and if you were waiting for the market to mitigate your extreme order block here, because the first one has failed to make a reaction, so you have to wait for the market to mitigate your extreme order block. So it has taken really long for the market to drop and mitigate this decisional order block and this extreme order block, and the market has even failed to the extreme order block has failed to make a reaction here. So this is a complete waste of time. So this is a perfect example where you can use internal structures to take trades while waiting for the market to mitigate your decisional order block or your extreme order block. So let me come back a little bit so that I can show you how you can start. You can mark your internal structure and take trades based on this. Okay, so here for example, the market has dropped. After taking out this inducement, the market has pushed a little bit higher here and failed to break this higher high here. Okay, so we have to mark this like an inducement here. This is an inducement in terms of internal structure, and then wait for the market to break this structure and create a valid order block or mitigate a valid order block, so you can start taking your trade. So this is an internal structure here. Okay, so the market has broken it and pushed higher without taking any inducement or mitigating a valid order block here. So we cannot take a sell here based on internal structure. So at this point the market has already mitigated our decisional order block here, so we still have to wait for the market to create a new structure in internal structure. Okay, so here the market has pushed higher and took out this inducement here. So this is our valid inducement here. We could have taken a trade here. Let me use bar replace so that you can understand it clearly. So at this point the market has made a small reaction here to the downside, giving you a sign that the market will drop. Every time the market create this kind of shadow, that means the market has typed on something. The market has is giving you an indication that there will be a reversal. Okay, the market will make a small reaction here, but there is no order block here. There's not anything here. So why the market is making this small reaction here? So first of all, if you want to see it clearly, move to the intermediate time frame, which is M5. Okay, so this is like a trend line liquidity that the market has cleared here. Okay, this is like a trend line liquidity and the market has cleared this liquidity. So that's why the market is giving us this small reaction here. Every time the market clears liquidity somewhere, it will always make a reaction to the opposite side. So this is like a downtrend. This is a trend line, so a bearish trend line, I mean. So the market has pushed higher to take all this liquidity, then the market will reinject that liquidity in the opposite direction here. So if we move back to our main time frame in M15, we also see that there is another obstacle here. This is like an advanced smart money concept. So this is our imbalance. The imbalance also makes the market react exactly the same way as an order block. Okay, the market has made this small reaction on this imbalance here, so we can take our sell based on this imbalance right here. So this is always in terms of internal structures. This will be sometimes it will work, sometimes it will not work. So you have to be careful. As I told you, you have to reduce your risk and take only short-term trades. Okay, so you can use this liquidity sweep plus this imbalance that the market has mitigated, then you can take your sell based on these two confirmations. Okay, and the market has dropped to completely broke the structure in lower time frame, so we can keep marking these new internal structures until the market mitigate our extreme order block, which is below here. So the market has not yet mitigated our extreme order block, and the market is not creating single candle order block, so there is no indication that the market will rise. Okay, so we can keep trading based on internal structure until the market create a single candle order block or mitigate our extreme order block. So now let's wait for the market and see if the market will create another structures in terms of internal structure. Okay, we see here that the market has taken out this inducement. After breaking this structure, the market has taken out this inducement here. Okay, and the market is pushing higher. So let's see what will the market do. Here the market is giving us another indication for a sell. The market has done exactly the same thing it did behind here. The market has given us a small reaction, create a small shadow here, giving an indication that it will keep dropping. But at this moment, do you know why the market is making this small reaction here? Because the market has mitigated our order flow in terms of internal structure. Okay, so this is our order flow, the last buying move before this sell. Okay, and this order block will be the refinement of this order flow. Okay, but this one is not valid because the market has already mitigated. Okay, the market has already mitigated. There is no valid imbalance here. Maybe we can use this extreme order block, which is not yet mitigated, this small shadow. This will be our extreme order block in terms of internal structure. So the market has mitigated this order flow and then start making a small reaction here. So this one here is a very low probability because this zone is really large. The market can give us a small reaction to trap traders and then keep push higher to take out their liquidity before dropping. Okay, so if you want, you can take this trade, or if you want to play it safe, then you can wait for the market to create another structures in terms of internal structure. Okay, so this is our break of structure. So we have again to wait for the market to create another structure, and the market has almost mitigated our extreme order block and without creating a valid single candle order block. So there is still no indication that the market will rise. Okay, so we can keep selling until the market give us a clear indication that it will rise in terms of main structures now, because our main structure is bullish. Okay, the market has shifted the structure behind here and we are waiting for the market to mitigate our extreme order block or create a single candle order block so that we can take our buy. But the market is not giving us any indication, so we can keep trading on internal structure until the market mitigates or give us a real indication that it will go up. Okay, so here in terms of internal structure, the market has created this structure and we have to wait for the market to take this inducement here and maybe mitigate our extreme order block or create a single candle order block. Then we can take our sell based on internal structure. Okay, so here the market has taken out this inducement. Okay, and the market is pushing a little bit high, and here the market has created a liquidity sweep. This is the London session high and the market has cleared it. Okay, and the market is giving us this indication here, but behind over here, for example, this also is a valid trade here because the market has created a valid single candle order block and market closed below it. Okay, so this one is also our valid single candle order block, so we can take a sell here based on lower time frame confirmation. Okay, if you switch to lower time frame confirmation, you have any confirmation, then you can take your sell here, but the market has pushed higher to take out this order block, so this is our valid loss here. Okay, and this one is our next entry. The market has cleared the London high then you can take sell based on this single candle order block, this one. Okay, you have to switch to your lower time frame and see if the market create any indication choke flip entry, so you can also take your sell here. Okay, so this one, our stop loss will be just above here, and our take profit will be our extreme order block down below. Okay, and finally the market has dropped and to take our take profit here. Okay, and finally the market has mitigated now our extreme order block. So at this point you can now switch to lower time frame to look for confirmation to take your buy based on your main time frame, because the market has mitigated our extreme order block. Okay, so you can switch to your lower time frame and start taking your buys. The market has given us even additional confirmation, which is here. This is our Asian session low, and the market has swept this liquidity, and this becomes a high probability setup. Okay, but unfortunately the market has completely broken, so this is a valid loss in terms of main structure. This is a valid low because a valid loss, I mean, because we have respected our trading plan. We have waited for the market to mitigate it, and we switch to lower time frame. If you have any confirmation, then we can take a buy, but unfortunately the market has completely dropped and broken it. So imagine if you were waiting for the market has taken like 1, 2, 3 days, 3 days to drop and mitigate your extreme order block here. You have been waiting for 3 days for the market to drop and mitigate your order block, but the market, when it dropped, it completely break your order block. So this will really frustrate you. This is a complete waste of time. So with internal structure, you can take trades based on session liquidities or internal structures like this while waiting for the market to mitigate your extreme order block. Okay, so you can catch multiple trades based on a single leg move like this, but you have also to keep in mind that these trades will be low probability and you have to reduce your risk. Okay, so this is how you can take your trade based on internal structure. I hope this video helped you to understand how you can use internal structure while waiting for the market to mitigate your extreme order block. So if this video was helpful for you, don't forget to give me a thumbs up and subscribe to my channel, and stay tuned for the next video. See you next time.